Hello there, welcome to my channel. This is the Gen Z Analyst, and on this channel, we talk everything accounting, finance, data analytics, and everything in between. So, welcome to my channel. If this is your first time on my channel, don't forget to subscribe to the channel and also like the video and share with others so they can also benefit from what you are coming to learn or you have learned on this particular channel. Alright, so in this particular video, we are coming to dive into the new IFRS Accounting Standard, IFRS 18, Presentation and Disclosure in Financial Statements, which is a new standard that was issued by the International Accounting Standards Board, IASB, on the 1st of April 2024 to replace the existing standard IAS 1, Presentation of Financial Statements, which talks about the general disclosure or presentation of general purpose financial statements prepared under IFRS Accounting Standards. Okay, and it also details the structure, the content, and also the minimum disclosure requirements for a full financial statement under IFRS. So that's what this new financial accounting standard aims to do. Okay, so the effective date of implementation of this new accounting standard is any period on or after 1st January 2027. So we still have about a year and maybe a month more to go for this particular IFRS standard to become effective. However, the standard states that earlier application is permitted. Okay, so you don't need to wait until 2027 before you implement this particular standard. And so, as we do in accounting, whenever a new standard is issued, we need to update our knowledge. Now, on this particular channel, I have a video on IAS 1, Presentation of Financial Statements. And so, since IFRS 18 has come to replace that particular standard, there is therefore the need for me to make another video that updates the content of the earlier video on IAS 1, Presentation of Financial Statements. If you don't know what the video I'm talking about, I'm going to leave it on top of my screen so that you can just click on it and then you can go there and see the video I'm talking about. Okay, so as I do, my strategy or my strategy is to go straight to practical application. But before that, let's talk briefly about the new IFRS 18 Presentation and Disclosure in Financial Statements and what it is all about. Okay, so I'm just going to talk about some of the key changes that are happening when it comes to the IFRS 18. Okay, so as I said, this new standard replaces the IAS 1 for periods on or after 1st January 2027. And the aim of this particular IFRS 18 is to improve 1, the presentation, 2, comparability, and 3, transparency of financial statements, presentation, and also disclosures. Okay, so that's what it aims to do basically. Now, the key changes are as follows. 1, it introduces defined categories for income and expenses in the statements of profit or loss. Particularly, for instance, you have clear categorization of operating activities, investing activities, as well as financing and income taxes, as well as discontinued operations that appear in the financial statement. So here there are clearly defined categories. Okay, and these clearly shows operations, investing, financing, as well as financial income taxes that are there. Okay, so that's the first key thing that you should note when it comes to IFRS 18. Secondly, it requires 2 new defined subtotals. These subtotals are operating profit or loss, which is now a mandatory total that should appear on the face of the financial statement, particularly the statement of profit or loss. And then profit or loss before financing and income taxes. Okay, this is also a mandatory subtotal on the face of the statement of profit or loss. So take note of that as well. Then it also introduces stricter requirements on aggregation and disaggregation of items so that financial statements provide clear breakdowns. Okay, so it talks much about aggregation and disaggregation in the financial statement. So some items are supposed to be aggregated, whilst others are supposed to be disaggregated. It talks much about all of these things. So you can grab this particular standard on the IFRS website and have a detailed look at these things. Okay, now it also requires the disclosure of management defined performance measures, MPMS. Now this is an entirely new introduction in the standard. Okay, so management is supposed to disclose performance measures. Okay, now these, even though these subtotals are not specified by IFRS, they are to be used by management for external communications. Okay, so that reconciliations can be done with other IFRS standards. Okay, so that is very important. So these are some of the key changes that were introduced in IFRS 18, presentation and disclosure in financial statements. Okay, now in a nutshell, while recognition and measurement of items generally remains unchanged when it comes to IFRS 18, presentation and disclosure in financial statements, the key changes are the presentation and disclosure requirements. Okay, these have changed substantially, and so you need to be able to keep yourself abreast of these disclosure and presentation requirements when it comes to IFRS 18. Okay, so in order to understand the new presentation requirements, let's look at this particular scenario here, and that will help us to, understand whatever we need to understand. Okay, so we have a trial balance here and an additional information to present that. Okay, so quickly let's go through this scenario and see. So this is a trial balance. You have the debit and then the credit columns. So you have administrative expenses, distribution expenses. Sorry, we have share capital, $1 per share. We have share premium, revaluation surplus, dividend paid, cash at hand and in cash at bank and in hand. We have receivables, interest paid, dividends received, interest received. Right. We have land and buildings at cost. We have land 380,000 and buildings is 100,000. Okay. We have land and buildings accumulated depreciation. We have plants and machinery at cost. The accumulated depreciation is here. We have retained earnings at 1st April 2024. We have purchases, we have sales, we have inventory at 1st April 2024. That's the beginning of the financial year. We have trade payables, we have bank loan. Okay, then we have additional information. Inventory at 31st March 2025 was valued at a cost of 95,000. Now included in this balance were goods that had cost 15,000. These goods had become damaged during the year, and it is considered that the goods could be sold for 5,500 less commission of $5,500. Okay, so this particular talks about inventory valuation, and that is detailed or guidance is provided for by IAS 2 inventories. Okay, now we have additional information 2. Depreciation for the year to 31st March 2025 is to be charged against cost of sales as follows. So you have buildings 5% on cost, straight line, plant and machinery 30% on carrying amount, that is reducing balance method. Okay, so that is also provided for by IAS 16, property, plants and equipment, right? Okay, then we have land is to be revalued upwards by 100,000. This is also IAS 16 provision. Then we have income tax of $165,000 is to be provided for the year to 31st March 2025. Then finally, we have the bank loan is repayable in 5 years' time. Okay, so required. Prepare the statement of profit or loss and other comprehensive income, statement of changes in equity, and statement of financial position for the year ended 31st March 2025. Note, show all workings. Notes are not required. Okay, so that is what we have to introduce ourselves to IFRS 18. So quickly, this is what we are going to do. As I said, on this particular channel, we show only standard things here. So what we're going to do is to present our financial statement. So the first one we are supposed to present is the income statement. Now, it is noteworthy that the names of the financial statements are not compulsory. Okay, somebody can use income statement, another person can use statements of profit or loss and other comprehensive income. So they are all acceptable. Okay, so we have income statement. When it comes to the balance sheet, somebody can use balance sheet, another person can use statement of financial position. Okay, it is still acceptable by the new standard IFRS 18. Then we also have so we have statements of changes in equity, right? So let me expand this a little and also click and drag this here. Okay, so we have that. Then I can come here and copy this and I can paste it right here and right here as well. Come here and paste it somewhere here for the meantime. In the meantime, then I can also come here and paste this here as well. Okay, so let's start with the income statement. So with the income statement, that is where the significant changes had occurred. Okay, so that's what we are coming to concentrate on the most. So let's put this at the center and also put this here. Okay, so the first item when it comes to the income statement is revenue. Now, it's not everything that I am showing. At least you should have a heading at the top. So we have statement of profit or loss and other comprehensive income for the year ended 31st March 2025. Okay, so we can have that. Or I can even come here and so I'm just trying to format our header so that it becomes a bit more friendlier. So that's what I'm trying to do. So I'm going to center across selection and hit OK. These are not new things if you are somebody who has been watching my videos, and so that is that. So I'm going to center across selection. Okay, so we have revenue. We are going to be having costs of sales. Then we will have our gross profit. This is same as the IS1 presentation. Then after gross profit, we have admin expenses. We'll have distribution expenses. Then the compulsory or the mandatory subtotal comes, which is operating profits. Then we have income from investments, right? Then we have another compulsory total comes, profits before financing and income taxes. Then we have our interest expense. Then we have another subtotal, which is now mandatory, profit before tax. That's profit before tax. Then we have our income tax expense. Then we have our profits for the year. Then we have our other comprehensive income. Okay, so when it comes to this particular standard IFRS 18, the highlighted subtotals are now mandatory. These three are now mandatory, or these four rather. Okay, then we have total comprehensive income for the year, or total comprehensive income, just to get that. Okay, make that also. So that is what we have as far as IFRS 18 is concerned. So as far as IFRS 18 is concerned, this is the presentation format for the financial statement, the profit statement of profit or loss, and other comprehensive income. Okay, so that's what you are having there. So let me reduce this to 0 decimal places. All right, so that's what we are having there. Now we can insert some of the figures that we can insert. So when in an exam scenario, this is what you do. Okay, you first come up with the pro forma statements and input the figures that are direct. Okay, and then later you can do the calculation. So I'm going to have another sheet here called workings. Okay, because the question says all workings should be clearly shown. So I'll just move this to the far end here. All right. So I'm going to be having my revenue. There's nothing affecting my revenue in the question, so I can put that directly there. So my revenue is 2165. So I can put it manually or link it. So I prefer linking it. So I just come here and link this. Okay, cost of sales. There are a lot of things that are affecting cost of sales, so we're going to leave it for now. We have our inventory valuation. We have depreciation of our property, plant, and equipment, which is stated here that is to be charged against cost of sales and all that. So we need to leave that for now. Then we know that our gross profit is going to be equal to our revenue minus our cost of sales right there. So let me insert this. So cost of sales can be 0 for now. So I'm going to insert this and this as well. Okay, now we have admin expenses. Our admin expenses, nothing is going to affect our admin expenses, so we can bring them here. So my administration expenses is here. My distribution costs or distribution expenses are also there, right? So operating profit is going to be equal to my gross profit minus the sum of these two. Minus the sum of those two. So I can just see that. Then we have income from investing. We don't know yet. We're going to do that calculation, right? Then we have profit before financing and income taxes. That is going to be equal to our operating profit plus our income from investments. Okay. Then we have our interest expense. Let's assume we don't know that yet. So this again, we're going to do same for this. Then we have profit before taxes. Profit before taxes is going to be my profit before financing and income taxes minus my interest expense. So that is that. Then our income tax is given straightforward. Usually income taxes are much more complex, calculations are much more complex, especially where you have deferred taxes, which is fully provided for by IAS 12 income taxes. Okay, but in this particular scenario, this is a straightforward provision. So income tax of 165,000 is to be provided for the year to 31st March 2025. So straight away, we can come here and put our income tax here, 165. So our profit for the year is going to be the total profit before tax minus our income tax expense. So that is our total there. Then our other comprehensive income would come here, and total comprehensive income will now be equal to our profit for the year plus the comprehensive income, and that will give us our total comprehensive income. This is 0 for now, so I can have this and double underline this. Now this is not supposed to have anything beneath as well as this one. Okay, so let me reduce this a little. Yeah. Okay, so we have the pro forma income statement, and as I said, this is my main focus. Okay, so what is left is for us to determine this figure, this one, this, yes, and this one as well. So we are left with only 4 figures to determine. So quickly, I think we are going to the workings and calculate our cost of sales. So we have workings, right? Then we have 1, cost of sales. So in order to calculate cost of sales, we have, this is basic accounting. I have dealt with the basics on this particular channel. So if you want to know how to understand this really, then you need to go to the basics, and I have videos on that. You can go and check it out, how to prepare the journals, to the extracting the trial balance, to preparing the financial statements. I have done all of that on this particular channel, so you can check that out. So we have our opening inventory. We have our opening inventory. We are going to be adding purchases. So you add purchases. Then we will less closing inventory. Then we'll add our depreciations. Depreciation from buildings. So we have plants and machinery first. So we have building, and then plants and machinery. Then we'll have our total cost of sales. Alright, so that's what we are going to be having here. So again, I can just come here and copy this and paste it here nicely. Okay, so our opening inventory per our question is given in the trial balance. So we have inventory at 1st April 2024. That's 140. So I can come here and input my 140. Purchases is given in the trial balance as well. So we have purchases to 1260. So I'll come here and input 1260. Then we have closing inventory. Now, Our closing inventory is determined in accordance with IAS 2 inventories. Now, they say that inventory at 31st March 2025 was valued at the cost of 95,000. Included in this balance were goods that had cost 15,000. These goods had become damaged during the year, and it is considered that the goods could be sold for 5,500 less commission of 500. Now, according to IAS 2, inventory is supposed to be valued at the lower of cost and net realizable value. Okay, the net realizable value. Now, let's do that quickly here. So we have cost and then net realizable value, that is NRV. That is how to value inventories. Now, according to the question, the cost of our inventory is 95,000. So 95,000. Okay, so it means we know our cost. Now let's calculate our net realizable value. Now, net realizable value is cost less cost to sell. Okay, so that is how we calculate our net realizable value. Now, the net realizable value can be calculated from the scenario given. They are telling us that included in the cost is goods that had cost 15,000. Okay, now these goods had become damaged during the year, and it is considered that this good could be sold for 5,500 less commission of 500. So it means that in order to sell these goods, we need to have to incur an additional cost to sell it. Now, it means that ordinarily, if we want to sell these 95,000, we need to deduct these 15,000 which are damaged to get what? 80,000, right? But in order to get this particular figure as well, there are some goods that have been damaged, and those goods can be separately sold for 5,500, incurring a commission of 500. So it means that at the end of the day, if we sell the amount of damaged goods, you are going to be getting 5,000, right? Because that is the 5,500 minus the commission you are going to be paying to the sales agent. So in net, you are going to be recovering 5,000 out of this 15,000 damaged cost. Okay, so it means that effectively we are going to be incurring a cost of 10,000. So this is how it works. In order to calculate the net realizable value, I'm going to be having my cost less the cost of the estimated goods that were damaged, that is 15,000. However, we are going to be selling those goods at 5,500 less a commission of 500. So effectively, we are going to be selling those goods at how much? 10,000. So it means that out of this 5,000, 15,000, you are going to be recovering 5,000. So I'm going to add 5,000 to this amount, and that will give me 85,000. I don't know if you get it. That is how NRV is calculated. Now, this is very key. It confuses a lot of students. When it comes to calculating the NRV, I'm going to go through this. You are going to have the cost less cost to sell. Now, the cost to sell in this particular case is the 15,000. Okay, but out of this 15,000, you are saying that part of this 15,000 could be sold for 5,500. Now, this 5,500 will be sold, but the one who makes the sale is going to get a commission of 500. So in effect, you are only going to get 5,000 out of the sale. So if we have a damaged goods of 15,000 and we are sold and we are getting 5,000 back, it means the cost of the goods that are damaged effectively is 10,000, and that is exactly what we did here. Okay, so in effect we have 10,000, so I could just do the cost minus 10,000 here to get the NRV. So that is how we calculate it. So here I'm going to be having 85, right? Effectively there. Remember, there's 3 zeros here, aggregation. Okay, so that is how we calculate the closing inventory value. Then we have our depreciation. In order to calculate depreciation, we need to have our PPE schedule. So quickly, I'll come here, workings 2, which is going to be my PPE schedule. So the PPE schedule, we are going to be listing all our assets, fixed assets or non-current assets. So we'll have land, we have buildings, we'll have plant and machinery. Then we'll have our total. So let me wrap this text and expand this a little and also reduce this. So I'm just formatting these so we can just put here like this, and also I can copy this and paste it across here. Then we'll have our costs. So we have cost at 1st April 2024. Now this cost can be gotten from the trial balance. So quickly, let's come to the question. So you have land and buildings at cost. So we have land 380, buildings is 100. So we have that here. This is 380. This is 100. Then our plant and machinery is 400 at cost. Plant and machinery is 400. Okay. Then we have accumulated depreciation. Now this accumulated depreciation is brought here. There are many ways of preparing the PPE schedule, okay, depending on the scenario given and how you want to deal with the issue. So I'm going to bring it here because plant and machinery is depreciated on a reducing balance basis. Okay, so bringing the accumulated depreciation here will make me get the carrying amount on which to calculate my next depreciation. So I have accumulated depreciation here. Okay, so that is going to be equal to this. So my accumulated depreciation on plant and machinery is 170, and that of buildings is 30 right here. So I can have here equals 30. So as I said, this is the most important subtotal I need. So I'm going to be having this minus 170. So that's 230 right there. So after getting the cost, there was a revaluation. So I also have revaluation gain. So how do I get my revaluation? Now on the statement of on the additional information number 3, it states that land is to be revalued upwards by 100,000. So it means land, the value of land has increased by 100. Okay, so that's what we are having there as well. Then we can now have our depreciation for the period or charge for the period. Or so I have my charge for the year. Now on the charge for the year, we don't depreciate land. Okay, so this is going to be 0 automatically. Buildings will be depreciated. The basis of depreciation is given here. So building is 5% on cost, straight line method. Plant and machinery 30% on carrying amount. So let's come here. We are going to be having this cost times 5%. That's 5. And then we also have this carrying amount times 30%. 69 right there. Okay, so with that, we can calculate the total carrying amount of our PPE. So we have carrying amount at 31st March 2025, right? So let me expand this a bit. So that will be equal to the addition of this plus, so this is going to be equal to our cost minus accumulated depreciation plus revaluation gain minus depreciation for the year. So that is 480 there. Then I can copy this across using Control R. Okay, so that's what we have there. Then we can have these totals here. Can copy this. Okay, so let me just copy it down. So this particular value here is what you are going to present on the face of the statement of financial position or the balance sheet. Okay, so that is what we are having there. All right. So let me insert this. And also format this as an accounting figure with 0 decimal places. Right. So now that we have our depreciation, we can link them to the cost of sale. Okay, so buildings, depreciation that is charged for the year only, not the accumulated depreciation. Accumulated depreciation only appears on the statement of financial position or the balance sheet. So for my buildings, depreciation is 5. For my plant and machinery, depreciation is 69. Okay, so I'm going to be having that. So our total cost of sale is going to be opening inventory plus purchases minus closing inventory plus depreciation for buildings and depreciation for plants and machinery. So we have 1389. So I can bolding this and also double underline and insert single underline here. Right. Okay, so that is that with our workings. So we can just go there and complete our financial statement. So cost of sale is going to be equal to, from the workings, we have this. Then our income from investments. Let's go to the question and see what incomes from investments we have. In a trial balance, we have dividend received of 15 and interest received of 1. So we can come here and add those two together. Those are income from investment. So dividend is from investments in equity, and then interest is investment in debt. Okay, so we have that. Then we have our interest expense. Interest expense is also given straightforward. So interest paid is 25. So I can come here and have my interest paid 25 right here. Now, when it comes to presentation on of the financial statements, especially the income statements, you can put expenses as negative figures and revenues as positive. But in this case, I'm just keeping everything as positive and using my formulas to determine the right calculations. Okay, so that's what I'm having there. Okay, now let's come to the other comprehensive income. So the other comprehensive income is the revaluation of land upwards by 100,000. Okay, so that 100 there is our revaluation. So I can have here gain on land revaluation. Gain on land revaluation. Okay, so that's what we have there. Let me do this. All right. So it means our total comprehensive income is 157. Total profit for the year is 57. So we have this and this. Okay, so that is it for our income statement. Let's move on to the statement of changes in equity. So when it comes to the changes in equity, this is basically showing the equity section of the statement of financial position and the changes therein. Okay, so that's what we're going to do. So we're going to be having a description here. Then we can list all our equity items. So we are talking about share capital, right? We have share premium. We have revaluation surplus. We also have retained earnings. Then we have our total here. So I can wrap this text, wrap the text, center it, put it here. That's nice. So I can copy this and paste it across. So we have so we have balance at 1st April 2024. So for share capital, it is 270 from the trial balance. Share premium is also there. This is share premium 80. Revaluation surplus is 20 right here. Retained earnings, let's look out for our retained earnings. As at 1st January is 235. So I can sum this, alt equals to sum that. Then we have our total comprehensive income. So the total comprehensive income is going to be, so under share capital is 0, this is 0. Revaluation surplus is 100. So I'll come to my income statement and pick this 100 here. Then for retained earnings, we're going to be adding the profit for the year, which is 57. So we have that, and then I can sum this as well, like that. Then we have dividends. Dividend paid is going to reduce our retained earnings. Now in the question, you should be very careful. We have dividend received and dividend paid. So dividend paid is what is going out of the business, and so this is an expense in the statement of changes in equity. It's not an expense but a reduction in retained earnings. Okay, so you need to be very careful with that. So I'll come here and link that particular dividend paid, which is 27. So I can just copy this formula down by dragging it. So with that, we have balance at 31st March 2025. That is going to be equal to my balance at the beginning plus any comprehensive income minus dividend paid. Okay, so I can just come here and copy that across. So this is what we are going to be seeing on the face. So this is 0 all across. Control R to do that. And also format this as an accounting figure with 0 decimal places. Okay. So when it comes to the balance sheet, I'll just come and input those there. So that is it for our changes in equity as well. Nicely done. Okay. Just trying to reformat this. Format well. Okay. So that is that. Then now let's prepare the balance sheet. So with the balance sheet, we are going to be having two of these. So I can select this and copy it to the right using Control R, and also put it at the middle here and this. Okay, so we have our non-current assets. Non-current assets, we have PPE, that's property, plant and equipment. Then we have our current assets. Current assets, we have inventories, we have receivables or trade receivables. We also have cash at bank and in hand. So that will give us our total assets. Then we have equity and liabilities. So the equity and liabilities, we are going to list all of the items we have here. So I'll come to my changes. So for equity, the first one is equity, right? So let me have equity here. So equity, I'm going to copy all of this and try to transpose it here. So when it comes here, I'll just come here and say transpose. And do this, reduce this to put it at the bottom here. Okay. And also remove this. And remove the dark formatting there. So as simple as that, I've done that. Then the costs can come. So again, when it comes to the exam scenario, you need to do this to show that you know what you're doing. Okay, even before you insert the figures, at least if an examiner sees this and you are out of time and you're not able to complete what you're supposed to do, showing this alone shows that you actually knew the format and all that. It was because of time constraints. That was why you were not able to do it. So that's for exam, and that's an exam tip for you. Okay, and when you do this, quickly put the figures that you can input. For example, PPE, I know for sure that it's from my working, so I can just come here and pick this particular total, PPE. Okay, inventories, it has been determined to be what? 85,000, so I just put my 85 here, or I can just come here and link it from this particular place, 85. Trade receivables is given directly in the question, in the trial balance, so we have receivables of 233. Then cash and bank is also given directly as 3 here, so I can just come here and sum these 321. Sorry, so this is supposed to be like this. So the total is going to be equal to this plus this. So that's 1027. Let me format this as an accounting figure with 0 decimal places. And also cut this and paste here. Okay, now our share premium, we're going to be doing the same thing. I'll just come to here, copy this, sorry, so let me delete these. So what I'm going to do is to come here, statement of changes in equity, and copy these figures and transpose them here, paste by transposition. Okay, so it's giving me reference error. So that's not going to work unless I convert it into hard-coded figures before it can work. So just need to do that one by one. Sometimes these things help you save time. Okay, so that's why I'm doing that. So we have share capital of 270, share premium of 80. We have revaluation surplus of 120, as well as retained earnings of 265. So the total can come here, 735 right there. Then we have our non-current liabilities. There is a loan in the trial balance. We have bank loan of 100. Even though the term is not given, we want to perceive that it is a long-term loan. Okay, so this is a long-term long-term liability. So we can come here and link it from here. Then, so that can come here, or cut this and paste it here. And this is bank loan. Then we also have our current liabilities. So with our current liabilities, we have trade payables, and then we have income or current tax. So our trade payables is given in the trial balance, that is 27, and then our income tax expense is also given to be 165. So I can come here and sum these two together, and then this will give me my total equity and liabilities. Now, as far as the balance sheet is concerned, the formatting and the measurement disclosure, everything is the same, okay, as we have under IAS 1. When it comes to the statement of cash flows, that has not been included in this particular video because it's a separate standard, and that standard, IAS 7, remains the same. Okay, so we are not going to be doing anything about that. So the major change occurred under the income statement. Okay, the income statement with these compulsory subtotals. All right, so take note of that. I mean, that's the crux of our video today. So that's what we're going to be doing. So we're going to be having the sum of this plus this plus this. So I can double underline this and also insert one line here, and also bolding this, bolding this, bolding this as well. Okay, so just like that, we have come to the end of preparing these financial statements. All right, I'm going to be sharing the okay, so the last thing we need to do is to show our workings. So cost of sales, you can say W1, that is workings 1, so that when I go to workings 1, I know that this is a breakdown of cost of sales. Then I think all the others are the same. Then when it comes to the balance sheet as well, I need to show that PPE calculation is workings 2. Okay, very important, very, very important. So there's no way to do this. So that is how we prepare financial statements under the new IFRS standard, IFRS 18. Okay, so that is that. We have come to the end of this particular video. Thank you for sticking to the end. I will see you in my next video where we are going to explore other things. Okay, so you can check out my channel. On this channel, we learn about financial modeling, finance, accounting, serious topics, data analytics across all data tools, Excel, Power BI, Python. I'll be introducing Tableau and SQL very soon. So do subscribe to the channel, and don't forget to like the video if you found it useful, and don't also forget to share with your friends and others. All right, so I'll see you in my next videos.